The Strait of Hormuz is one of the world's most important maritime choke points. A choke point is a narrow passage where global trade becomes vulnerable because so much traffic has to pass through one small area. According to the International Energy Agency, nearly 15 million barrels per day of crude oil passed through Hormuz in 2025. That represented about 34% of global crude oil trade. More than 110 billion cubic meters of LNG also moved through the strait, including most of Qatar's LNG exports. That is why Hormuz is different from many other conflicts. This is not just a local military issue, it is an energy issue, a shipping issue, and an inflation issue at the same time. If tankers cannot move normally, the world does not simply lose a route. It loses confidence in one of the key arteries of the global economy. The most obvious impact is oil. When the market sees risk in Hormuz, traders do not wait for every barrel to disappear. They price in fear immediately. That means oil prices can rise before consumers see any direct shortage. Markets move on expectations, not just current supply. But oil is only the visible part of the story. LNG matters too. Countries that depend on imported gas, especially in Asia, may face pressure if shipments slow down or become more expensive. And when energy becomes more expensive, the effect spreads. Fuel costs rise. Electricity costs can rise. Transport becomes more expensive. Factories pay more. Airlines pay more. Shipping companies pay more. This is how a crisis in one narrow waterway can move from tanker routes to supermarket prices. The next shock is less visible, but extremely important. Insurance. Ships moving through high-risk waters often need war risk insurance. If insurers raise premiums, shipping becomes more expensive. If insurers refuse coverage, some ships may simply avoid the route. That is why technically open does not always mean commercially normal. A shipping lane can remain open on a map while becoming too risky for ordinary business. Ship owners also have to think about crew safety, vessel security, and the possibility of delays or attacks. Some may wait. Some may reroute. Some may demand higher rates. And every extra cost moves through the supply chain. It may start as an insurance premium, but it can end as a higher fuel bill, a higher freight rate, or a higher price for imported goods. Asia is especially exposed. Much of the oil and LNG moving through Hormuz is headed to Asian markets. China, India, Japan, and South Korea all have major energy links to the Gulf. If Hormuz becomes unreliable, Asian buyers may look for alternative supplies. That can push up competition for oil and gas from other regions. But alternatives are not simple. Pipelines cannot replace all the volume. Other ports cannot instantly absorb the pressure. LNG is even harder because not every shipment can be rerouted easily. So the world starts competing for replacement energy. And when everyone looks for alternatives at the same time, alternatives become more expensive. The dangerous part is that the world may not feel the full impact on day one. The real damage can build quietly, week by week. The second wave is about inventories. Countries and companies often have stockpiles, so the first days of a disruption may look manageable. But if the crisis continues, inventories fall, refiners become nervous, buyers pay more to secure supply, governments may step in, strategic reserves may enter the conversation. At the same time, markets begin to ask bigger questions. Can Gulf energy exports be trusted? Can shipping lanes be protected? Are global supply chains too dependent on one narrow route? That is when a shipping crisis becomes a confidence crisis. and confidence is hard to rebuild. The Strait of Hormuz did not become important overnight. For decades, the world built an energy system that assumed this route would keep working. Now that assumption is being tested. The closure or effective disruption of Hormuz is not just about ships waiting at sea. It is about oil, gas, insurance, inflation, military risk, and the fragile design of global trade. The real question is not only how long Hormuz stays closed. The real question is why the world allowed so much of its energy security to depend on one narrow stretch of water. And if this crisis continues, we may discover that the real shock was never the closure itself. It was everything that came after. If you enjoy stories about the hidden systems behind modern life, subscribe to the channel.